Hey traders, today I'm revealing a powerful 1-minute EMA trading strategy that could help you capture some serious profits with speed and precision. This setup is designed for fast-paced market moves, making it perfect for scalping. We'll be combining 3 carefully chosen exponential moving averages, EMAs, with the stochastic RSI to maximize your trade accuracy. Let me break it down for you in detail. The 3 EMAs we'll be using: 8 EMA high, dark blue. This EMA reacts quickly to price movements, helping you spot short-term price action and immediate momentum shifts. 34 EMA high, blue. A slower EMA that smooths out noise, focusing on medium-term trend direction. It acts as a buffer to confirm price strength. 55 EMA high. This is the slowest EMA in the setup, giving a broader view of the trend. It helps filter out smaller fluctuations, ensuring you're trading with the dominant trend. Stochastic RSI, default settings, perfect for confirming entries when price gets overbought or oversold. When these indicators sync up, you'll get some pretty solid trade signals. I'll break it down step by step so you can start using it right away. All right, let's break down the rules for this setup so you can understand it clearly. Rule 1, when the 8 EMA is above the 34 EMA and the 34 EMA is above the 55 EMA, it signals that the market is in an uptrend. Basically, buyers are in control and the price is steadily climbing. On the flip side, when the 55 EMA is above the 34 EMA and the 34 EMA is above the 8 EMA, it means the market is in a downtrend. Sellers are dominating and the price is gradually moving lower. This EMA sequence helps you figure out the market's direction at a glance. When the smaller EMAs are on top, the trend is strong upward. When the larger EMAs take the lead, the trend is shifting downward. Knowing this basic rule helps you stay on the right side of the market, making smarter entries and exits. Now let's dive into the next rules to complete the setup. Rule 2, always aim to take trades near the 55 EMA line. It's a key spot where price often reacts. Now, take a look at the chart with me. The market is sitting right at the 55 EMA, which fits our rule perfectly. So based on that, I'm placing a trade here, but there's more. Check the 8 EMA. It just crossed above the 34 EMA, which is a sign the market could be gearing up for an upward move. And to top it off, the stochastic RSI has also hit the overbought zone, confirming strong momentum. Since all these signals are lining up, price near the 55 EMA, 8 EMA crossing above 34 EMA, and stochastic RSI overbought, I'm taking a long trade here, expecting the market to push higher. Today, I'm trading Bitcoin versus US dollar, BTC USD, and I'm doing it live. No pre-recorded setups here. I always prefer showing my strategies in real time because it gives you a better idea of how I make decisions, handle market movements, and stay calm under pressure. It's the best way for you to really understand my trading mindset. All right, the setup looks good, so I'm going ahead and placing a buy trade right now. Let's see how this plays out, and of course, how much profit we can grab from this move. Stay tuned. All right, so here's the situation right now. The 8 EMA just crossed above the 55 EMA, which usually means the market might go up. That's definitely a good sign. But I'm not jumping in just yet. I'm waiting for a bit more confirmation. Ideally, I'd like to see the 34 EMA also move above the 55 EMA to really confirm this upward trend. But the 34 EMA still hasn't crossed above the 55 EMA, and that's a red flag for me. When the EMAs aren't lining up like this, it suggests the market might not be able to hold that upward momentum. At one point, my profit was sitting around 500 USD, which looked pretty promising. Starting to see some strong selling pressure right now. Sellers are really stepping in, and it's starting to overpower the buyers. This could be an early sign that we're about to see a reversal or that the bullish trend is weakening. Since the market's not holding up the way I'd like, it's time to be smart and cut my losses. If the next candle closes below the 55 EMA, I'm going to exit the trade because that would confirm that sellers have taken control. And just like that, the current candle closed below the 55 EMA, so it's time to exit the trade. I'm closing out now and taking a loss of 95 USD. All right, my first trade didn't go as planned, ended with a loss. But hey, that's part of the game, right? The key here is to stick to the strategy no matter what. A loss doesn't mean the strategy is flawed. It just means the market didn't align with our setup this time. Remember, consistency and discipline make a successful trader in the long run, so we're staying focused. Now, let's break down my next trade step by step so you can see my thought process clearly. As I mentioned earlier, rule number 2 in this setup is all about entering trades near the 55 EMA line. Why? Because the 55 EMA often acts as dynamic support or resistance. When the price approaches this line, it's a critical decision zone where the market could either bounce or break, depending on momentum. Looking at the chart, the price is hovering near the 55 EMA, making it a valid spot to consider another trade. The stochastic RSI has hit the oversold zone, signaling that the market might be losing bullish momentum and could head downward. Why the oversold zone matters. An oversold stochastic RSI suggests buying pressure has weakened and sellers might be stepping in. Since the price is near the 55 EMA and the indicators align, this signals a possible market reversal. Considering both signals, the price near the 55 EMA and the stochastic RSI showing oversold, I'm taking a sell trade here. No revenge trades, no emotional decisions, just following the plan. Let's see how this one plays out. All right, so here's the game plan. Keeping it super simple and clear, if the price starts to bounce back above the 55 EMA, I'll close the trade immediately to minimize any losses. No second guessing or hoping, it's all about managing risk smartly. I'll wait for the current candle to fully close above the 55 EMA before making my decision. But I'm not stopping there. To be extra sure, I'll wait for one more candle to confirm whether my sell position is still valid or if the market is showing signs of reversing. Patience is key here. Better to wait for a clear signal than to rush in and regret it later. Now look at this. A solid red candle just dropped further and broke below the 55 EMA line. That's exactly what I was waiting for. This break below the 55 EMA signals strong selling pressure, indicating the market could continue moving downward. So based on my strategy, I'm holding on to this trade for now and letting the market do its thing. Let's see how this move plays out, sticking to the plan and staying focused. All right, here's how I'm looking at it right now. I'm keeping a close eye on how the EMAs are aligning. According to rule 1 of my strategy, we're looking for a specific order. 55 EMA should be above the 34 EMA, and the 34 EMA should be above the 8 EMA. When this alignment happens, it typically indicates that sellers are in control of the market and the price tends to be falling. Now, as I'm watching the chart, I can see that all 3 EMAs are perfectly aligned, just as I expected. 55 EMA is above the 34 EMA, and the 34 EMA is above the 8 EMA. This is a strong signal that the market is currently trending down, and everything is lining up just the way we want. With this setup, the market is showing clear signs of bearish movement, and I'm in a solid position with around 300 USD profits so far. It's all about trusting the process and letting the strategy work itself out. I'll continue to monitor how the price behaves and keep my risk management in check. Let's see where this goes. Take a look closely at what's happening right now. The market is struggling to move down any further from this point. This suggests that buyers are stepping in and defending this level, almost like they're trying to stop the price from dropping. It's an important spot to watch. Interestingly, we've seen this before at the same price level. Last time, the market bounced up from here, but wasn't able to keep going up, eventually losing steam. To make it clearer, I'll draw a rectangle box around this zone. Check out how the price is finding support right in this area. This is where the buyers seem to be holding strong. Here's the important part. If the price breaks below this zone where buyers have been sitting, we could see a big drop because the support would be broken. And guess what? The sellers have successfully broken through this zone. This could signal that a stronger downward move is coming. Let's stay alert and watch how the market reacts. I'm thinking it's a good time to lock in some profits here. I'm currently up around $1,500, which feels pretty solid. If you check the chart closely, the market is hanging around a buyer's zone. There's a chance the price might return to that level, and possibly reverse again, just like before. These moves can take a bit of time to play out, and honestly, I'm happy with this profit. No need to chase every dollar. Profit is profit. The key is staying consistent and securing gains when the market offers them. So I'm closing this trade now. All right, $1,291 profit booked. I highly recommend you all take the time to learn price action trading. Seriously, it's a game changer. Understanding how price moves and reacts around key levels can make a huge difference in your results. And when you combine price action with indicators, it gets even better. The clarity you get helps you spot solid trade opportunities and can lead to some really good profits. Now, let's take a look at the market right here. Remember how I mentioned earlier that the market would rise to this level and then reverse? Well, that's exactly what's happening now. This area is acting as a key resistance zone where the price is struggling to push higher and is starting to pull back. This setup actually presents a great entry point for a short position. Why? Because as per rule number one, when we look at the EMA alignment, it clearly indicates a downtrend. The EMAs are perfectly lined up, showing sellers are still in control, and the market structure is favoring a downside move. So this could be a solid opportunity for those looking to catch a short trade while sticking to the strategy. Remember, it's all about patience, discipline, and following your plan. Let the market show you the way. No need to force trades. Stick to your strategy, and you'll stay on the right path. All right, here's the final rule for this strategy. Pay close attention because it's super important. You should avoid taking trades when all the EMAs are bunched up closely together. Look right here, the 55 EMA, 34 EMA, and 8 EMA are practically overlapping. This usually means the market is in a phase of indecision. When EMAs get this tight, the price can become unpredictable with sudden dips or sharp spikes. This type of setup can be risky since there's no clear trend direction. It's like the market is building pressure, unsure if it'll break higher or lower. In situations like these, the best move is to stay patient and avoid trading unless you have solid confirmation. Only trade when you're confident in the setup. Remember, patience pays off in trading. Sometimes sitting out is better than forcing a risky move. Stick to your rules and you'll keep yourself on the right path for long-term success. This channel is dedicated to live trading and proven strategies that I've personally tested and found effective through real market experience. I only share strategies that have shown results for me, so you can trust that what you're learning here is backed by real trades, not just theories. My goal is to help you trade smarter, make informed decisions, and grow your skills as a trader. If you find value in learning these tested strategies and want to stay updated with my latest live trades, subscribe to the channel and hit the notification bell so you never miss a new upload. Your support helps me continue creating quality content and sharing strategies that work. Let's build a strong trading community together. Subscribe now and be part of this exciting journey to mastering the markets.